Hey, good morning, team. Happy weekend. This is your July 15th Saturday members video. I'm doing it on Saturday morning because I won't be in the office on Sunday to work on this. So I'm working on my stuff for the week, getting prepped up, going through all the charts. I'm sending you the scanned list of the top stocks right now. Little caveat to that, guys, we are extremely extended overall in the market. I'm going to go with the market right now. Not going to go through many stocks because pretty much everything has been for the last few weeks just keep going higher and higher and higher, climbing that wall of worry. And that's kind of scared me a little bit because once that shoe dropped, it's gonna drop hard. I have this stock up here, Oprah. It's been a really good company. I made some really good money on this as a stock. Look at this run that it's had. Every time it kind of hits that 3 ATR, kind of goes back to the median, and then it had a little short-term squeeze here. If you notice, it has a 1 day, 2 day, 3 day, 4 day, a five. I mean, the classic 5 day squeeze, and then it breaks out on this bar. You could have been buying it somewhere around here, where you have this little shelf right here, comes back in. So say you're a buyer right there, and happens to work out when that's when the squeeze fired. Sorry, um, when the momentum started turning from negative to positive. You pick it up here somewhere around 1985, let's say even 20. This sucker went all the way to 28. That's a great move in the stock, and it just poof, rocket all the way up. And look what happened on Friday. This thing was down 30, almost 30, 29% in 1 day. These things can happen. These things can happen if you don't have stops. If you have, first of all, for me personally, I would probably been stop, taking it out somewhere around 24 and change, because that's kind of like my target. As a swing trader, I have predefined stop losses and predefined targets, and I just churn that money in, the same capital over and over again. I'd rather take 10% winners than, wait for two or three, um, 50% winner or 40% winner, because they come, far and few in between, where I can get a lot more 7 to 12% winners and just keep churning that same capital over and over again. At the end of the day, you compound it out faster, your capital. So, just things like this can happen. Just be careful. Um, you know, um, this is a huge drop. I mean, again, it was an announcement, something like that. They're they're doing a shelf restructure. They're doing something with a company that was just news that came out that nobody expected, nobody knew anything about, and boom, you have a 29% drop in the stock. So those sort of things, can kind of like destroy a portfolio really quick if you're in these stocks. So just be careful with the stocks that you do have. If you still have stocks long, man, ratchet up those stops. Just be careful. I mean, let's go through the market really quick. That's really all I'm going to cover today, just the market a little bit. Um, if look at the SPY, we hit again. We hit this 3 ATR. We rolled it up. We rolled it up. We rolled it up, and then what did we do, guys? We came right back to the mean. This is a 21, right? A 21. We came right back to the mean. This is the classical mean reversion. Um, Again, something like here, we should have came back a little further, but we didn't. So we did write it up, but this is super extended here. We come back to the mean. We go back to ATR, we come back to the mean, and we go boom, 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 all the way up to over two, all-time high. We close right in the middle. Um, a pullback to the mean is somewhere around that 444 range. I'm going to show you that I'm going to show you that 444 in the S&P, so you can kind of see that gap I was telling you about on the chat. Here it is. There's a gap right there, and also there's a gap right there. Actually, sorry, my bad. This gap got filled right there. You see how that gap? We're in this day. Let me clean this up. Right? We gapped up. We kept going up, and a couple of days later we came back, and there it is. The gap is filled. We still have this one from back here that has not gotten filled, and this is all the way back to 42.30, something like that. 42.30 from 45.30, basically. That's 300 points. Are we going to drop 300 points in the S&P in a day? No, we're not going to drop it in a day. Over 3 months, we can, which is basically these next summer months, um, which are historically the worst months of the year. We also, if you notice here, where are we getting to, guys? I mean, this is kind of like look what we're getting to, that 1.61, second target kind of extension. We hit the 127, we paused there, came here. Now we're getting up to the 168. Um, this is a classic overextended scenario. Same thing here, overextended. We came back to the mean. Um, I don't know. It just seems like a worst case scenario we come back to 44.11 um, to let's see here. Hope this is still testing. Nope. Okay, I think I'll have some technical difficulties there with the buttons and everything. So what I was saying, um, that gap of 44.44, which is kind of like a thing right here. See if you notice here. Let me open this up a little more. Right there. See this right here? It's a gap. This is a gap. This gap needs to be filled, which is that 44.44 I was telling you guys about. So, which is it was this gap right here that I have circled, right? And then we kind of we actually gap down here to fill it. So this is filled, right? And then that gap got filled on the way up and here as well. Now we gapped up again. So now this is the gap we need to fill here. So this is that 44 range, which is basically 70 80 points on the S&P drop. Takes fills this gap, and like I was mentioning before, we still have this bad boy over here that needs to get filled right here. That gap is still open. I mean, it's a quite a few points away, but still. Let me go to the weekly. Okay, on the weekly, we made a huge turn here. Back here in December, we hit that 2 ATR. We kind of rode it up a little bit, and then we kind of been chopping around downwards, and then we finally broke out of this double bottom. If you notice this right here, it's a typical double bottom where you have the down, right, and then you have the up from the down. That's the first half of the W, and then you have the second leg down. And now the second leg down has to undercut the first one for it to be considered a double bottom. Okay, and then you had this next leg up, but it never crossed above this midpoint. And when it crosses across that midpoint, and then actually, if you think about it, well, this wasn't a double bottom. If you think about it, this right here when it finally closed it, and if you notice, that's kind of when the squeeze fired right here when it broke this midpoint and this double bottom right here. So this is a double bottom pattern on a weekly, okay? And then it kind of broke it here, and then we get this move. Clean this up now. There's a gap here on the daily. I don't have any gaps in the weekly because it's pretty hard to gap if you well actually See, there's a little gap here, a little gap here that eventually um, this got filled here. So we had this, huge big bars back here, huge big bars right here, and then that's kind of when we came in, and this was back at the 2 ATR. We're up here at the three. I mean, if you look at it, we're right there at the 3 ATR level on the weekly, which is pretty far and few in between. Uh, we go back here. The last time we were at 3 ATR, geez, it was like back here somewhere. But we came at it from a lower momentum to a higher momentum, and then we kind of straighten out and keep going higher. This is already a fired squeeze. We have one, two, three, four, five. Normally you have maybe like three more weeks of higher runs. We can that 4,500 kind of like the target that we wanted to get hit coming in the next few months. Even if we get a pullback to the even to the 1 ATR, that's 43.10. If we go back even to the median here of this little support, this little resistance area back here, which now becomes support, it's that 42.80 something. We should fill this gap right here on the weekly. Again, this is a weekly chart, so it takes a week to fill this bar. So this could take a while. This could take the next 3 months basically to kind of like maybe come back down a little bit or just chop around for a little bit longer. So just be careful. That's what I'm trying to say. We are extended. Um, we already have a fire squeeze. Momentum is already, kicking in. So it's not like there's a lot more fuel. If we do have a lot more fuel, and let's see how the Nasdaq is doing. Um, and oh my wow! I mean, this is unprecedented. This is an incredible move. But just again, we have a long, and this is again the weekly guys. So this is danger zone. If you come back, 337 from 379, that's almost 400 points on the Nasdaq. You see the composite. Yeah, same thing. We come back down to like 1377. That's like 2,000 points here. Um, Again, we had a long momentum bar. All I'm saying is just notice whenever we're up at this levels here, we can go higher, but normally we do have a little pullback. Even here, when you're thinking, oh, this is going great, it's firing, we're right here at 15,703. This came all the way down to a negative 1 ATR of 14.5. So 15.7 to 14.5, that's 2,200 points. Okay, but then from there we rallied all the way up to almost a 3 ATR, and then I don't think we're going to sell off like this again. I think this is done. I think the bear market it's done. I think we're going to be going higher from in 2024 after the Fed kind of eases up and everything. But I think before we go higher, we need to go lower to then bounce up again. Even something like this, when we do have strength, we come back down. We have strength. We come back down. We finally broke this, and then we take off, and then we're riding this wave. This is not sustainable. I mean, it has been 1, 2, 3, 4, 5 for the last month and a half. Really, for the last 2 months, we've had incredible run. That personally has gotten me a little bit because I was starting to get short, over here somewhere, and I just got, I got caught up in this. So I'm just buying time for this thing to come back down again. How long will it take? I don't know. But the last time we were at these levels, we usually get a pullback. We were at these levels, we usually get a pullback. Let me see. I mean, this was a great look at this run. This is kind of like the same kind of scenario as we have right now, where we had this kind of like we're a little bit extended here, we pull back. Then we had this great run extended. We kind of pull back into the median. Just I'm trying to kind of so you guys can visualize kind of what I'm talking about. Whenever we get these runs, we usually probabilities tell you that we kind of fall back, mean reversion kind of trade. So how does this look? Something like back here, back here, back here, you know. So Even here, look at this, look at this. This is a great run. We come back down again. Look at this. Oof. Even here, look at this tremendous run, right? You do have a little bit of sideways action that we pull back in, and then we come back down. So here from 58.81 to 55, that's 300 points, but that's that's from 55. So that's 300 points is basically the same thing as 3,000 points. Now in the range that we're in right now, this is back in this is 15,000. This is when it was 5,900. But what I'm saying is when we get extended, we usually go back to the mean. I mean, boom, we usually go back. We ride this sucker up, we go back all the way up, and we fall back down. Fall back down. So I'm digressing here, but I want to get the point to kind of see every single instance when we're at these levels. A pullback is not necessarily unhealthy, it's just natural. Even if you go back over here to the 1 ATR, that's 14,251, 15.5. That's still 2,300 points on the NASDAQ. All right. So again, not really many stocks to go through. Let's just see some of the like AI, again, just all over the place. We look at the main stocks, Nvidia. I mean, this has just been incredible this run here. This is the one thing that scares me, where it ended up the week not on its high, but it's kind of pulling back a little bit uh, from here. So this gap, I don't know if it's ever going to get filled, but it's a pretty big gap if it goes down. We are looking at a potential squeeze kind of forming again, but again, this action right here, this is not a positive action where you're down 30 points from the high on the day, and you end up down on the day. So just doesn't look like we can continue much higher. Let me look at the IWM. Well, again, but we have not looked that we can continue much higher for the last month, and we have the Russell, kind of same thing, you know, pretty much is math. I mean, this is three, three, three ATR, which is basically on the bell curve. It's and a point, less than 5% probabilities that this will continue, kind of thing. So we do get the pullbacks. Um, so theme here, I keep repeating myself the same thing. If you are still holding longs, be careful. What I've personally been doing, I've been selling premium, um, just trying to roll my underwater positions that are short, waiting for that pullback to come. If it doesn't, I just keep rolling, keep trading the market until eventually we get that, couple 100 point pullback on the S&P over time, and then just keep selling short puts, rolling up, financing the top side, just buying time on those. Um, on my other new positions, I had a synthetic long on Mara. This has been working really well. I sold some covered calls in the 22, 23 range. So that kind of worked out pretty good on Friday when we had a little pullback. Um, Oil, I've been following oil. Has had a really nice run. Um, all the way up to, like, if you notice, these dots were here from way before here. So when we got up to them, what did we do? We kind of hung around and we pulled back down again, near the 3 ATR. So if you just trade the math, guys, you could be, safe, 99.9% of the time. And at the times that you're not safe, you just kind of stop out and get yourself resituated. So the market is a little bit extended. It's been extended for a while. We're climbing that wall of worry, but also the P call, the put to call ratio. This is also sorry. This is anything Here, this is what I'm looking at. Anything less than zero point 0.6, anything less than zero point 0.7 is extended on the low side. Anything over 1.2 is extended on the top side. This is my lines in the sand here. One and anything really 0.7, 5.5. We've been we've been overbought for a while. So this isn't a trending thing that we're just looking at the numbers here. So this also tells me that there's a lot of complacency and there's a lot less puts being bought, so people are not as scared. The VIX, I mean, the VIX is clean this up. I mean, we are like we are 2-year lows here in the VIX. Um, I mean, we were up here at 21 just a few months ago. So again, things are very complacent right now. A quick spike in the VIX takes us up 3 or 4 points. I mean, this went from almost 13 to 17, a 4 point move in 1, 2, 3 in basically 3 days, and then we came back down again. So we could easily spike up. Volatility spikes up. Um, this could be a summer where things kind of like start not performing as they used to. So again, just be careful. Well, if you have stops right now, let me take this off. Sorry, trying to do things that without taking that off. If you still have longs, again, I'm saying the same thing a million different ways. I don't want you to get hurt. Put your stops in and do not chase. Do not take on new positions right now that are looking extended just because you might have FOMO. Let the market come in a little bit, let the dust settle, and then wait for the next leg up. Which again, if we are starting a new bull market, we are not even at the beginning of it yet. I mean, bull markets don't last, a month. They last a couple of years. So, from what I'm looking at, we might see the next 2 to 3 months, downwards to sideways, sideways to downwards action. Um, Let the Fed kind of like do its last rate hike. Then we might get the Santa Claus rally. Late October might be the last kind of like the last drop off kind of thing. We might start getting a little rally into November, December. Um, Sideways action in January and so in February, and then if the Fed kind of like meets again and says, okay, we're done, and we might consider reducing rates again later on in the fourth quarter, third quarter, 2024, even 2025, the market's just going to take off, and we're going to have a really nice bull 2024 second half of the year, maybe even as early as second quarter of 2024. So just kind of like be looking for that. I'm looking longer term scenarios, just so you can kind of start positioning yourself when you see setups to start letting them ride a little longer. Once we get into that time frame. For now, just take quick profits if you still have them. Don't let don't let your current profits kind of turn around on you, and then get out in time to kind of secure those. All right, guys, this has been a bit longer, long-winded than I thought, but I wanted to just kind of like get the point home that when the shoe does drop, it's gonna drop hard because what the market does is basically it rides up in the escalator, but it drops in the it drops in the elevator. All right, guys.